Hey everyone, welcome back to our channel. Today, we discuss the type of analysis that Warren Buffett, the legendary investor, uses to make his investment decisions. Warren Buffett is considered one of the most successful investors of all time, and understanding the analysis methods he employs can give us valuable insights. So let's dive in. The first type of analysis that Warren Buffett is well known for is fundamental analysis. This involves studying the financial health of a company, its management, competitive advantage, and market position. Buffett believes that a company's true value can be estimated by thoroughly analyzing these factors. Let's consider an example. Imagine Buffett is looking to invest in company A, so Buffett would start by examining the company's financial statements, such as the balance sheet and income statement, to understand its profitability and financial stability. He would also review the management team, looking for capable leaders who have a track record of making wise decisions. Furthermore, Buffett pays attention to a company's competitive advantage, also known as its moat. A competitive advantage can be anything that gives a company an edge over its competitors, like strong brand recognition or exclusive patents. Buffett believes that companies with a sustainable competitive advantage are more likely to provide stable returns over the long term. The second type of analysis that Buffett is famous for is value investing. This approach involves identifying undervalued companies in the market, which means their stock prices do not reflect the true worth of the company. Let's say we identify company B, whose stock price is lower than its intrinsic value according to our analysis. Buffett would likely see this as an opportunity to invest. In value investing, he looks for quality companies with a strong track record that are currently trading at a discount. Buffett believes that the market sometimes misprices stocks due to short-term fluctuations or investor ignorance. By identifying undervalued companies, he aims to buy their stocks at a low price and hold onto them for the long term, allowing their value to appreciate over time. The third concept that Warren Buffett emphasizes in his analysis is the margin of safety. This is the principle of investing in stocks when they are significantly undervalued compared to their intrinsic value, providing a cushion against potential losses. Suppose we identify company C as a potential investment, so Buffett would calculate the intrinsic value of the stock based on his analysis. However, he wouldn't buy the stock unless it is selling at a substantial discount to its intrinsic value. This discount acts as a margin of safety, protecting him from any potential downturns in the market. Buffett believes that by having a margin of safety, he can reduce the risk of permanent capital loss and increase the potential for higher returns in the long run. So to recap, Warren Buffett primarily uses fundamental analysis to evaluate a company's financials and competitive advantage. He is a renowned value investor, seeking undervalued stocks with long-term potential. And lastly, he emphasizes the importance of a margin of safety to protect against potential losses. We hope you found this video helpful and insightful. If you did, please hit the like button and subscribe to our channel for more informative content.